Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, oh wait, hold on a second. Where did my Spotify go? I just had it open. Did I close it? Did I close it? My gosh, Seth, what is wrong with you? There we go. All right, guys. Well, the Treasury market doesn't look so hot this morning. AO says they are dead. Powell testifying at 3. Actually, he's testifying twice today. He's going to be on at 3 and he's going to be on at 10. So in 90 minutes, we'll have Powell speaking. Where is he? What is he? Where is he at? Let's check here real quick. Due to testify about semi-annual monetary policy report before the Senate Banking Committee. So that's, especially as of late, a market-moving event. Certainly, the senators are going to try and bait him into attacking Donald Trump again. Let's go to the charts. So you can see yesterday we had a little bit of a run in the overnight, but after we left, well, and I would say while we were trading, it was a buy, but after we left, it was down. I was kind of surprised because of like the tariffs and all that sort of thing. But basically what happened was they waited to react to tariffs until other nations reacted to the tariffs. And so we get these moves down. It's not like the end of the world, but it's not looking pretty good. Very good. Of course, if we were to make new lows below 108.21.5, then I would certainly be concerned and or upset. You know what? This is like a perfect example of like, okay, look, here's a great little cluster here. Breakout, that should mean, okay, and then pull back, and then what should happen? No, that's not what happened. Broke the pattern. S&P 500, taking things in stride to the week, not completely recovered, but doing okay. Oil on the bounce. It does seem like tensions in the Middle East are maybe heating up again, with the Donald Trump warning Hamas that if they don't return all of the hostages by Saturday, that things will get ugly. Gold and silver. Well, gold has taken a step back from its highs. A lot of chatter about 3,000. Also a lot of chatter about silver not really keeping up, and some people starting to say, oh, let's play silver. If the broader public starts to get interested in this gold story, and so far I am not seeing that. But if the broader public got involved in this, I think that you could see silver really, really skyrocket, because everybody will go, oh, gold's already up too much, let's get silver. That's the way that tends to go. I think given the trend that it's possible, but it's not yet. It's not yet. Here we got Kappa also taking a big hit. So I'm not quite sure what's driving all of that. Maybe stuff from China is likely there when you see copper and the metals all moving together. And then we've got the dollar and Japanese yen. Japanese yen doing okay here. Bitcoin not really going for that 10K yet. I would think that they would go for it, but maybe not. A sell could come through here, could do some real damage technically, but so that's basically where we're at. I have to say though, the action so far is pretty lackluster. I anticipate that we are probably going to go pretty sideways, lackluster action until Chairman Powell speaks at 10 o'clock Eastern time. And we don't really have much else in the way of news in there. We do have Williams and Bowman speaking later in the day. We do have a 3-year note auction. And that's basically it. And this would normally be the part where I'd be like, oh, I have some oatmeal or whatever. But I made sure I ate all of that before I got on today. And then it was a little bit late because I was having connection problems. But like restarting everything seemed to fix that. So I sure do feel like I'm missing something though. Let me come over here. Inventory cost basis for Sierra charts? Maybe. Oh, I already looked at that. I can just delete that. Wrote that one. So on here, we're going to do asset classes, trade, and what are we going to call this? I call it something different. Really need to prioritize that one. Because I kind of thought, you know, I should start building my own platform. And I kind of, I think we will do that, but that will just kind of be a side project, I think. I don't think that I should really move like all my focus over there. So that was kind of an interesting sell at 30. Interestingly enough, I can't see it on the inside anymore because they've already ticked back up. Well, there's something definitely going on there, but I'm not seeing too much follow-up yet. Perhaps bouncing. Perhaps the limit orders are going to win this one. Tough call, because there has been some relatively decent amount of selling trend come through in this area. No, it could be forming. So, you know, I think it's too early for it to form a liquidity hole, but that could be happening. Man, I came in today. I was like, oh, the room is so much cooler than it usually is. This is good. Maybe I won't sweat like a pig today. Nope, I'm already getting wet. Ah. What's this? How would you compare day trading, whether you go by technicals or fundamentals, with running a small shop in the neighborhood? The question that's been asked time and time over again. Can you earn a living by trading? And then I think to myself, many people can earn a living running a small shop in their neighborhood. Okay. And comparing the two, day traders have a lot of advantages. We don't have to pay rent. We do not need any staff members. There's no transportation costs. We have minimal investment, a fixed asset, probably a notebook and an extra monitor. Oh, so you don't have to pay a lot for equipment. Maybe we have a safer distance away from crime. We have more latitude in choosing which inventories to stock. There's no sales work. Our core business does not depend on who are in the neighborhood and their needs. Our working time is flexible. Well, what you're missing is that you have to have an edge that consistently generates profits every month. And the edges that existed that were like that were taken by the robots. Yeah, there are hundreds of people that live by running a small store. They aren't nameless faces making posts and YouTube videos online. They are people you can walk around your town and meet. But for day trading, most of the long-term successful day traders seem to also be selling courses on how to day trade. That seems awfully convenient. Beyond that, if you go to forums such as these, most of the successes are people who have made money for the last few weeks to months with very small accounts, which ultimately is meaningless. If you can make day trading profitable, would it be a great way to make a living? Yes, that is why so many people chase it. You sit around your house on a computer making money. Why wouldn't you want to do that? But the same logic holds true for the line of people buying lottery tickets. All you have to do is shuffle into a convenience store a few times a week and drop a small amount of money and you can become rich. But we can mathematically show that it is a bad investment despite a couple of people getting insanely rich doing it. There you go. I wouldn't have thought to bring up the lottery. This guy has a very devastating, devastating counter to this. Pretty devastating, Mario. Let's go and look at this guy. Witty Fault. Been around since 2018. He doesn't like the funded trader programs. That's cool. So I feel like he's a, brother here. Like he's saying a lot of the similar things that I do. Like, yeah, I mean, these strategies that you get online, those aren't going to work. But it does seem like he's trading. So how is he trading? Maybe if we go to the top here and we find posts, what has he made? Not helpful either. Well, I'm not going to dig into his history that deep. If you're running a shop, anything like a day trading business, you're stupid. I'd only run a shop in a low competition, high foot area with demand outstripping supply. It's literally nothing like day trading. What are you talking about? Looks like you're either gaslighting someone or yourself, coming up with fake justifications. Kind of weird and completely pointless comparison. That point that it's like only run a shop in a low competition, high footfall area is a really good argument here. Like day trading is not low competition. You know, I could probably make an argument that I have less retail competition in ZN than I do in other instruments, because all of the retail traders tend to go for ES. But the kind of seems to me, well, and there was this other thing. I remember a lot of people saying like, oh, well, what I can do is I can take advantage of other retail traders, right? And my conclusion on that is that the retail traders make such a small portion of the futures market. This wouldn't be the case in stocks. In stocks, I think that retail traders are about a third. But in futures, it seems to me that the retail traders are so small and insignificant compared to everybody else that, like, the idea of trying to make your money just from taking advantage of retail traders, I don't think that works. I don't think that works. So you might say, oh, but I don't actually have competition. Well, not from other retail traders, but you get competition from the robots. I'm seeing a lot of people starting to, well, okay, so like we're in a white collar recession, right? Which is kind of weird. Apparently, the unemployment rate in the tech sector is, I understand it, is almost 25%. Okay, so when you think about that, that's crazy. I'm surprised that doesn't have more fall through into the broader economy. But maybe we just need to give it more time. I don't know. Actually, it might not be so bad, because I saw a noticeable uptick in hiring activity last week. What's the number like normally, though? I don't know. I don't think that where I got that from, it wasn't a chart. They were just calculating it from like other statistics. Maybe they could make a chart. I don't know. Still, this is pretty nasty, right? Fed's President Beth Hammack has said it's likely to hold rates steady for some time. Risks to inflation are skewed to the upside right now. I don't know if that's true. You know what I see right now? I see an economy where there are very strong risks for both inflation and deflation. Like, yeah, a tariff war, like a full-on tariff war, could be inflationary. But again, the problem with saying that tariffs are inflationary, like, it's one thing to say tariffs generally raise prices for consumers. You as a consumer end up paying more. That's true. But that's only true on a per product basis. When you look at the economy overall, that increase in one good is going to come at the expense of demand in other goods. And the issue is that if you're not printing money at that time, if you keep things tight, then I think that what happens is demand just falls across the board. Now all of a sudden you have a deflationary factor, right? Like, people aren't buying stuff. That's less money transacting. That's deflationary, even though like the costs for producers are going up. So what ends up happening? The producers get squeezed. A lot of them go out of business. You get a recession. And how do you get out of that recession? You're going to have to cut rates at the risk of then at that point generating inflation. Because if you do print money when that sort of a thing is going on, then you're definitely going to get inflation, right? It's going to be much more prone to get the inflation. So like there is, I think, a strong case for like, and then on top of that, we got like the whole AI thing going on, which like I have yet to see these LLMs perform in a way that makes me convinced that we would need less workers. And I'm not saying that it's not going to happen, but I would say that we would need some pretty significant game-changing advances in the technology to get there. We would need some pretty game-changing changes. The big issue is the hallucinations. Like if I set it on a task, I say, go and make as much money as you can trading ZN futures, right? And then I set the robot off on doing that. And it's going to be like, okay, well, I would like to install this Python library, but then I need the operating system to be like this. And it's going to make all of these little mistakes along the way. And I give it a day and it probably bricks the computer. So people have done this sort of a thing. And that's what would happen is that the AI couldn't complete the task and the system would be hosed. Like they would have to reinstall the system. So the hallucinations and the accuracy of it are a significant problem for using it like an employee, right? And how are you going to get that accuracy up? And how are you going to get it to like do new things? I have seen some stuff where, like, for instance, an AI found a new branch of math, for instance. I think that the AIs can put together pieces of knowledge and make a new thing from the existing knowledge. But it doesn't like generate knowledge on its own. Like, I'm very skeptical of an AI's ability to make a successful trading algorithm, for instance. I think we're in the first leg of a giant meta order short. Well, the big iceberg and the big collision, let's call it, happened at 108.30. There was a bit of a short, but it's kind of balancing back out. You know what, Octavius? Actually, I think I disagree with you. My theory is that you're seeing a little bit of activity, but that the market makers are holding it because they believe that everybody's going to sit on their hands until Chairman Powell speaks in 1 hour. But let's see. You might be right. We could see further selling come through, and with the way that it was moving over in the overnight session, I think that's entirely possible. Anyways, where was I? AIs, yeah. One of the things that I see a lot, like, am I subscribed to the Singularity? I don't know. I get a lot of, I see posts from the Singularity a lot for some reason. And, oh, I tell you what, that one's actually a really good subreddit. Like, there are definitely people on that subreddit that are just absolute bonkers. Like, they really think that, that AI is going to replace everything and that the Singularity is close and all of that sort of stuff. But it is not like a cult subreddit. Like, they let everybody post and you get views from everywhere, and there is a lot of debate about it. It's really good. It's actually really good. But I'm starting to see a lot of people start to push the idea of like legislation to prevent automating certain workers. Isn't that interesting? And I'm kind of sitting here like, well, okay, if you're going to create legislation to protect tech workers from being automated away, why can't you give me legislation to protect market makers from being automated away? You know, I really honestly believe that there is a real social cost to the robots having taken over the market. Like the people providing liquidity don't really understand what's going on, and the cost of that is that when we get into the most volatile markets, the liquidity just completely pulls, and it's just a complete shit show. Technical term there, shit show. And I would like to see proposals to, you know, give people that are manually providing liquidity an advantage, or at least something to equalize them. Like if you can prove, I don't know how you would enforce it. Like how do you prove that you are doing it manually? I don't know if you could really actually do that. But perhaps you could just set a standard, like if you're making less than a certain amount, you go to the front of the queue. And then that would provide an incentive for more people to try and do market making, you know? So that we can have people that actually know what's going on with the market making. Okay, so when it comes to market making, Seth thinks that maybe we should protect the humans. But should we protect the humans in any other endeavor? But then in any other endeavor, I feel like we probably don't need it. I think that what I think is going to happen is the cost of some goods. Well, I think for goods, it's a different issue because goods, there's like materials and it costs a certain amount to mine the materials and things like that, right? So most hard goods will continue to, you know, I think you're going to see deflation across the board, but those things will probably fare better than other things, right? Services that involve manual labor, those will probably be somewhat protected because I think it's going to be quite some time before you have like manual labor robots. Okay, that uptick really affected the whole market there. I'm not hearing anything. Wait, let's make sure. Okay, we're getting something from Euro. From the ECB, I think. Some report from the ECB is what that is, I think. So this might have only a short-term impact. Yes, ZT is 2 year. But anything that is like knowledge-based services, I kind of think that those things are going to dramatically decline in price. Like right now, if I want like graphics for my stream or I want video editing for my stream, I've had people, you know, want to come in and do video editing, and it was a lot. It was like most YouTube channels will not be able to afford that. And now you're getting people in other countries coming in and doing it, and like the cost of it is just coming down like crazy. Like crazy. So yeah, I think that a lot of knowledge-based services are going to dramatically decline in price. And I would think that at some point you would get a situation where like a lot of people, like the deflation is so much because things like food, that'll certainly come down. The deflation will be so much that at some point it will be like you work really hard, you go to school, you get one job and you work for like a year and then that's it, you retire. Or like that's enough money for you to live the rest of your life or something like that. You know, like people don't work very often. Something like that. It would almost be like an issue to you need more workers. Then people were really being like, nobody wants to work anymore, right? But then at the same time, I'm just very skeptical about this idea that like robots are going to replace software engineers. I think that like the software engineer field is going to change, but I think you're still going to need software engineers. Mark Mitchell says, new PSYOP dropped, which says about constitutional crisis. Yes. So a lot of courts have, I think, overstepped their authority. Not so much like they've overstepped their authority, but like they've made legal judgments that aren't going to hold up. And they're really hampering the Trump administration's efforts right now. And the Trump administration may just ignore them, and the left is super, super uppity about that. Well, I actually don't think that they'll just ignore. Like, I don't think that they'll just outright illegal. Like, they will follow the law as they understand it. I don't think that they're going to do that. I guess really though, we are at the crossroads of this thing. Like either it continues to be like this in tech and more people get laid off, or at some point they realize that it's not working and there's like a mad rush to start hiring people again. So either way, it's probably going to be jarring, huh? What do you think of those youngsters working with Musk? I don't really think a whole lot about it. I thought it was very, very interesting that they tried to cancel the one guy and they were like, no. I think actually this is really interesting. That was maybe a really smart move. We'll see. Because if they had successfully gotten rid of that one guy, then it really would have turned into, we're going to go after personally everybody that works with the Trump administration, right? And that would make it very, very difficult for them to work right. So even if maybe this guy does deserve to be canceled, I don't know. I don't remember the details. It kind of sounded like that he had said some dumb things when he was a kid, but it was maybe not fair to judge him for what he had done as a kid. But instead, I think that they just kind of shut down that strategy. More broadly, though, like the left is just really upset that these guys are doing this stuff. They're like, they seem to think that it is improper somehow. And I kind of feel like these are things that are under the executive branch. The executive branch does not have the ability to send people in and do this. That just seems bonkers to me. But they have effectively convinced the left that there's something wrong with it. And it's definitely turned into like everybody on the left is saying the same thing. So there was a big iceberg at 31. It looks like they broke through it. Pooping their pants is all they have going for them. Well, I think that you know, the left has a really good like social media action network that I kind of thought would be really damaged after the election, but still seems to be going strong. And I kind of think that what I'm seeing is that network is pushing as hard as ever, but I don't think it's actually working. Like, I think that at this point, the majority of Americans look at that and just kind of ignore it. Like really. They're trying to make the government more efficient and stronger. Like, oh no, that's so terrible. I think if anything, it's just kind of like red pilling more people because they're seeing Elon Musk and Trump do something that they've wanted to see for a really, really long time, and the left is just completely flipping out about it. You know, more and more people that I'm seeing are kind of seeing it as, you know, for the game that it is now. You know what? I don't know if I need like a Gatorade. My eyelid is twitching here. Yeah, it was working on boomers, millennial, default demographic, but they've lost. Yeah, I think that the Zoomers are kind of been, yeah. In other words, the left is kind of doubling down on the kinds of strategies that got them into this mess. Here's where I think that their larger problem is. I will often see posts on TikTok and other places from the, you know, like the people that want a third party, right? They're always like, what, you know, like we need to get away from this tribalism. You know, why is everything always tribal? It's the left versus right. Like that's not necessary. Oh no. So naive. This is people. Tribalism is the very heart of humanity. Tribalism is what made us as successful as we are today. It is like one of the most deeply ingrained behaviors. It's one of the most unique behaviors to humans. You can't get rid of it. It's like trying to change human behavior itself. You can't get rid of tribalism. The reason that the United States has been successful as it has, of course, there's a lot of different factors, but one factor that I think is absolutely necessary, which is to say that without this, I don't think that we would be where we are today, is that we had a two-party political system that essentially utilizes tribalism to its advantage, right? We have two major tribes in the United States. We always have. This system just kind of naturally bifurcates itself. But those two tribes have to work together to be successful. And you can't really do anything without both tribes compromising to some extent. And I think that the reason the left has gotten them into the mess that they have is because the left started to believe the propaganda that they put out that essentially they could eliminate the other tribe. That's what it is. It turned into not only can we eliminate the other tribe. So I remember, you know, before Donald Trump, remember them saying like, oh, you know, these old white people, they're going to die out, and then the new people, they're all going to be liberal, and, you know, well, it's not going that way, is it? It's not going that way, is it? But that was when they started to believe that it was possible to destroy the other tribe. And then when Donald Trump came in, it turned into we have to destroy the other tribe. Like the other tribe, they are fascists, they're evil. We can't the republic is at stake, yada yada yada, right? And so they stopped working together. And I think that's why the left has gotten to, is in the quandary that it is. I love reading tangents about how we all need to unite while dancing around agreeing with me on everything is necessary first. This is definitely the thing we see on the left, isn't it? They want everything to be, you know, nice, but then they're not willing to compromise anything. What do you mean which day we should minimize our tick number in your perspective? That does not make any sense to me at all. I'm trying to think about what you could possibly mean by that. But try again. I'm sure it's just a language issue. There was a brief moment there at the beginning of the Trump administration that I kind of thought, okay, maybe we will start to get a little bit more working together, but they've immediately grabbed hold of it and yanked it the other way again. And especially on things like U.S. aid, that is such a losing issue for Democrats. It really is. Okay, you're talking about the tick size. Okay, but what do you mean by the minimize your tick size? Like the tick size is always the same. It's set by the exchange. Yeah, see, when you look at the right, like the right has always kind of been, in some respects, more extreme than the left. Like the far right is larger and more powerful than the far left. But those people don't want to be like, you know, we're gonna just take everybody else out of power and yada yada yada. Then they would really be like true fascists, right? But the left does. The left does. The left has, you know, is run by the far left are basically communists, and yeah, they want complete control. Back to 30. And there is definitely like a disconnect from reality going on over there, right? Like the inflation's expectation survey, I think, is the clearest example of that Democrats all of a sudden are expecting like insane amounts of inflation when the Wall Street estimates are like the worst case scenario is 3.6% inflation year over year. So like that's just straight up hysteria. Elon Musk facing possible deportation. That sounds like a suspicious story to me. Like, probably not. Democrats are planning to force ICE to include Elon Musk in the next deportation flight out of America. Democrats say Elon Musk is eligible to be deported under the mask. How so? Because they claim that he was an illegal immigrant. Because Elon Musk came on a student visa but didn't go to school and went to work. Why would he get deported to El Salvador though? Oh, because South Africa wouldn't take him. I don't think that that's realistic. I don't think that that's realistic that that would happen that way. But let's dig into that a little bit more. I hate him and Trump, but there's no way this will happen, lol. Yeah, because El Salvador offered to take everybody, I get. It's really crazy how quickly the left has turned into hate everything Elon Musk. Oh, there you go. He's been a U.S. citizen since 2002. Okay, well, and that kills that. That kills that. Even if that happened before, I don't think he can deport him over it. If Elon Musk gets deported, I'll eat a cookie. I should start saying it like that. The crazy thing is people are talking about, oh, well, but like deportations are already happening. Yeah, for people that already have like an active deportation order from a judge out for them. Good grief, people. USA didn't mess with these countries. You know, like the thing that's crazy, which you reduce, you can't reduce your tick size. That makes no sense. Anyways, it's crazy how like quickly border crossings came down, all of that. Like this whole thing, I do kind of wonder if this whole thing, like we're going to deport everybody sort of a thing, how much of that is how serious and how much of that is just bluster. I kind of think that if you start enforcing the law again, that then you're to that point where first you have to shut down the illegal immigration, which it looks like they're going to do. Then you can deal with the people that are here, right? And then end it as an issue forever. But we'll see. We'll see if it actually gets out. But I wonder if that's his plan. He's always kind of talked in a way that makes me think that his plan is shut down illegal immigration first and then do some sort of compromise. I'm talking about when you reduce your lot. No, that makes no sense. ABD, that makes no sense. So when you talk about tick size, There is a minimum tick size for each instrument. So if I'm trading the 10-year treasury, each tick is worth 15.625. And I can add contracts. You know, if I want more, I can add more contracts. Is there a particular day of the week that you take less risk? Sure. Mondays and Fridays, I take less risk. Sometimes Friday, I take more risk, but I take less contracts. Why do you think that that's what he's asking, Uzi? The thing that I'm having a hard time wrapping my head around is like, why is he using tick size, the word tick size, but whatever. Which days? Well, the best days to trade are Wednesday and Thursday. Tuesdays tend to be okay. I don't know. The whole sentence doesn't make any sense. I guess you the only thing that would in there that would get towards you talking about taking on more risk on some is that he said reduce. Remember when Trump said I don't remember him saying that exact thing. I must have missed that. I think that the Federal Reserve is hamstrung by poor models and ways of looking at the market. They kind of look at the market as this system that's supposed to find an equilibrium, and their job is to modify these parameters to ensure that it goes there. And the problem is that this is a dynamic system, and so their actions have impacts that they don't expect. And other things going on in the market, like just like this whole tariff thing. The impact of tariffs is not certain. Everybody seems to be acting like it's so clear what happens from it, but it really isn't. Okay, first of all, the way that things went with historic tariffs was still incredibly complicated. Two, we're applying it in different situations, and we're applying different types of tariffs. It's a complicated thing. And the way that different sectors of the economy react are different things. Like, or maybe let's just take this whole tech sector, a recession sort of thing, right? Can you really have like one of the most valuable parts of the economy be in like a straight up recession for years and years and years and that not have a nasty impact on the rest of the country? Seems to me like no, but they don't model for that, right? You know, there's some work at the Federal Reserve to use agent-based modeling, but that's not the primary model through which they function and make decisions from. This is why, you know, people have always talked like Jamie Dimon becoming the Fed president, for instance. They want somebody that's a trader that understands the impact that their decisions have, because the current Fed seems to not. Sometimes they seem to not. Like, if holding rates steady ends up being a bad decision here, this would essentially be their third or fourth major mistake, right? So even though I think that Donald Trump speaks mostly bluster, I think that there is some legitimate claim there that, you know, the Federal Reserve made a mistake during his first term. They made two mistakes. Because the first one was not reducing rates sooner when the economy was falling apart in 2018. And then the second mistake was not raising interest rates sooner. And that apparently is what caused the inflationary impulse from fiscal policy and everything was short-lived. What really made inflation go like super crazy was the Federal Reserve not increasing the interest rate sooner. Still haven't reached, yeah, but there was an iceberg at 30 too. Like, we're just in the middle of it. It really looks like that things have died down. And they're waiting for Powell. Treasuryandrisk.com. That's a domain I've never seen before. Meh. Okay, but what was the point of that? They had missteps, but it's better than Greenspan's Fed. What was so bad about Greenspan's Fed? Like, the economy was doing amazing then. I remember Greenspan being controversial, though, for sure. Like, I was a kid, so I didn't know what the details were, but I definitely knew who Greenspan was. See, so let me go back to the point that I was trying to make, though, okay? Because I think that a lot of people are saying, oh, well, this Fed is not making the decisions that they should. Like based on my reading of the models and my understanding of the knowledge, the Federal Reserve should have made a better decision. And what I'm saying is that the tools that the Federal Reserve is using and the economics that the Federal Reserve is using are fundamentally flawed. And the Federal Reserve is likely to continue to make similar bad decisions until they start to embrace more modern tools like agent-based modeling. And a person that kind of like is more of a trader sort of a thing might be able to intuitively make better decisions despite not understanding the Fed's models because of the problems with those models. Is something that people's intuition is better at than, but probably people's intuition would have another set of big problems. You really, I think it's something that's complicated enough that you really want some really solid agent-based modeling. And then I think that we would drastically reduce the amount of errors that the Federal Reserve makes. That lost all credibility when Bernanke played golf. Oh God, no, I don't agree with that. The Federal Reserve during the 2008 crisis saved things. Of course, they kind of were slow, but then they came to the rescue. That increased their credibility. Like after that, what the Federal Reserve was doing was all the market cared about. I keep seeing this kind of, I think you're maybe chat GPTing it there a little bit, illegal immigrant. Like, we're saying that, we're using that word because we see people in media talking about it all the time, like the Fed's credibility. But I really don't see the market outright trading against the Fed, right? Like, the Fed is still the biggest game in town. So this idea that, like, they're losing credibility, I don't really think holds water. Like, maybe less credibility than the Fed had in 2010. But I'm not going to trade against them. Yeah. How did they let Lehman? Because they were stupid. Obviously. It was sinful. Oh, come on. Just noting that kind of spike out there, that kind of looked like the market was caught in a tight range and there was a little bit of a stop run, but that there's still a decent amount of liquidity on the offer here, so it's not resulting in a trend yet. I lived through it up close. I mean, how old were you when that happened? Honestly. How old do you think I am? 33. Oh, wow, you're old. You're old. Look, I was there. I was very, very active watching the markets back then. That's when I started. I remember what happened. Oh my gosh, this eyes. Maybe I need some Gatorade. I turned 40 in May. Oh, sorry. You're telling me you're 33 now. Not 33 in 2008. I misunderstood that. I misunderstood that. If you're 33 now, then that means that in 2008 you were like in high school. How can you say you lived through it? You were a teenager. See, I was born in the bear market. I didn't see a bull market until I'd nearly been trading a year and a half. I mean, okay. I'm not sure. The issue that I'm getting here is I don't really see a coherent thesis to what you're saying. Like, all I hear is I'm upset at the Fed for how they handled 2008. But no clear, like, Okay, if you were 33 in 2007, that's different. But, like, to say, like, Lehman misstepped, but so did AIG, Merrill Lynch, Bear Stearns, etc. I really think that that's an unfair characterization of what happened, okay? Like AIG did what it's supposed to do, provide insurance, and, they didn't really have the structures in place to understand the consequence of the position that they were taking on. It just didn't exist back then. Like at the time, Goldman Sachs was really the only one that had the infrastructure to be able to see that sort of a thing, which is kind of why they survived. They didn't take on the same risks as other people did because they had this system that basically calculated their net position every night. Lehman Brothers, on the other hand, they were just degenerate risk taking. Merrill Lynch was pretty bad too, but Merrill Lynch was kind of, like that one wasn't unfortunate. They really should have saved Merrill Lynch. But Lehman Brothers, they were degenerate, man. And then the whole thing that they had afterwards, like, are we gonna like, we're gonna make Spinco and all of that sort of stuff? Like, my goodness. Yeah, Lehman deserved it. If anybody deserved it, it was Lehman. Man. So I don't think you're differentiating between, like, people that knew they were taking on degenerate risks versus people that kind of ended up screwing up because of deficiencies in the overall system. No. See, if Goldman did not have their risk management systems that they had and had taken on, like, the whole thing. Okay, well, let's go back. Okay, the whole thing is that Goldman Sachs was able to look at their position and see the issue well before anybody else, and got the insurance from AIG. Of course, how are they supposed to know that AIG wouldn't be able to pay up? I don't think that AIG realized that they wouldn't be able to pay up on that, right? So it wasn't Goldman's fault. But then, yes, it wasn't that they were allowed to become a bank, though. That's incorrect too. because they really didn't want to. But from talking to the people there and stuff, you know, because I worked there, like they did not want to become a bank holding company. Goldman's claim to fame was always how much money they were making on the, like, you know, fewer staff. Like they were highly efficient, and when they were forced to become a bank holding company, it changed it. Well, they bailed some out and then they let others collapse because they thought coming in, we should just let the market do its thing. And then after they let some of them collapse, they realized how stupid of an idea it was. You come in and you act like, man, you're talking like you think that they said at the beginning, okay, well, here's a financial crisis is coming. So how about we let Lehman Brothers and Bear Stearns and Merrill Lynch all go under, but we'll keep JP Morgan and Goldman Sachs because we like. That's not how it fucking worked, dude. That's not how it worked. The way that it worked was one financial institution had an issue. The idiots in charge said, let's let the market do its thing. So they were against intervention, so they didn't intervene, and then it got worse. And it basically got to the point where they realized if we don't step in and do something, there won't be an economy left. And so then they saved the people that were left. It wasn't them trying to pay God. It wasn't that they picked one or the other. It was that they didn't realize the seriousness of it or where it was going to go until it was too late to save some of them. It's kind of a funny thing. I think Republicans in general are the ones that they don't want to have any market intervention, right? Republicans in general are also like the most upset about what happened during the financial crisis. But if they had not finally stepped in, like the truth is that if they had stepped in earlier, there wouldn't have been a 2008 financial crisis. Yeah, we'll broadcast Powell. Yeah, AIG would have collapsed if not bailed out. That's true. But it wasn't that they decided to save AIG because they liked AIG. It was because it was at that point that they realized that just letting that happen was not working. See, again, they have a model that thinks this is an equilibrium. Market's efficient. Okay, so if a company goes out of business, that's the market deciding that we shouldn't have that company anymore. They're not competitive. They screwed up, whatever. Let them go out of business. And we need to let them go out of business, you know, to clean the cruft out and everything, right? The reality is that the market is a dynamic system, and allowing a large systemically important institution like that to go under has a dynamic impact on everything else. And so what happened was when they let one go under, that had an impact on the markets and it made things worse. And so then other people were under pressure. And the people in charge at the time didn't realize this was a problem and that, you know, like the nature of systemic risk until many institutions were already under. Yeah, the bad decision was letting Lehman collapse. Yes. I mean, I think you're saying the bad decision was bailing out AIG. I disagree. The bad decision was letting any of those banks collapse in the first place. They should have intervened much earlier. But you know, this just comes back to I want to have a real argument now. So you need to have a real thesis instead of just like a general feeling of dissatisfaction over how the 2008 crisis occurred, right? Lehman should have been bailed out, yes. But it wasn't that Lehman got, was allowed to fail and the other one wasn't because they decided to play God. It was because they were just behind the curve. They were just slow to understand what was going on. The reason that they bailed out AIG was because they didn't bail out Lehman and saw how bad it was. How bad doing that was. No. So you're saying bottom line, they all should have been bailed out or none of them. I really think that kind of misses the context of how it happened. Their original intention was to not bail out any of them. Right? Like they came in, their tendency was to let the market do its thing. Their intention was to not bail out anybody. And what happened was, halfway through that path, they figured out how terrible of a path that was. So bailing out none of them was not an option. If they had bailed out none of them, there wouldn't have been an economy left. I shudder to think about what would have happened if they had not bailed out anybody. That would have been ugly. No, they should have bailed out all of them at the very beginning, right? But when you say, like, the Federal Reserve was playing God, that kind of insinuates that they shouldn't have bailed out anybody. And that would have been bad. The reality is, again, the economy is a dynamic system. And it is one that is prone to endogenous shocks, which is to say that just because of the interactions that happen within the system, large-scale financial crises are prone and likely to happen. And we have to have government authorities there and ready to kind of rescue the economy and move it back into balance when that happens. Yeah, they should have. The Federal Reserve should have stepped in much earlier. Well, not the Fed. I mean, it was really the Fed, the Treasury, all these different guys, right? Government should have stepped in much earlier. Say, like, they should have all bailed them out or none of them is not a real thesis, I don't think. Because this kind of insinuates that there is some sort of like philosophical fairness that, whatever is the fair thing should also be like the most effective and efficient thing for the government to run the markets, right? I think this is another problem that I kind of see is that people have this philosophical approach to economics. So they say, well, the reason that we should be capitalists is because the stock market is perfectly efficient. That's bullshit. It's not perfectly efficient. Okay, so now that the market's not perfectly efficient, you realize that, I've completely undermined the argument for why we should have the system that we should have. And then all of a sudden you get people say, that's why you get all these kids out there going like, maybe we shouldn't be capitalists because the market is full of shit. They can all see it. And even if they don't necessarily understand the real academic argument behind it, they intuitively understand that we are kind of pursuing a certain way of running the economy that doesn't make sense. Well, you don't have a market because the market is perfectly efficient. You have a market because a market is literally the only way to transmit that information and get it all in one spot. And it's the only way to have a free economy, to actually give people economic autonomy. That's why you have an economy. So once you dispense with this, the market is perfectly efficient, then you can get away from these other dumb ideas that are like, well, we should be able to not touch the market and let it do its own thing. That's stupid. The market is always going to like do crazy stuff, and you're going to have somebody sitting there waiting to fix things when it goes wrong. And that's kind of why the Federal Reserve exists. And they didn't do their job in 2008 until it was already a big problem. And I very, very highly doubt that they ever make that mistake again. You loved Lehman? Well, I think that the people that were running that place were shitheads. What was that guy's name? Was it Moynihan? Man, you can remember, like, I came into the markets. I mean, I was always a news watcher, and I was always kind of generally aware of the reports and things like that. But I when the 2008 crisis came along, I would basically watch CNBC 24/7. And man, all the shit that the Lehman CEO was trying to do was just it was comical. It was like, we're gonna take these parts and spin it off into its own company, and we're gonna call it Spinco, and it was just like a complete joke. And then, immediately when that stuff came out, the market is like, no, this is bad. This is. And that's when you go back and you look at those days. It's just like pick up and then pick down and pick up. It was crazy. It was crazy. Like the people that were running that place were just dumb. Oh, you're right. It was Dick Fold. You're right. It was Dick Fold. Yeah, I'm sorry. I think that Dick Fold like just completely failed the test when like things went down. I think that they were making really dumb decisions. And I mean, I think that the real test of it was that, other people saw what was going on and did different things. But the guys at Lehman, they wanted to make the money. they care, like JP Morgan and Goldman, they understood that like the most important thing is to survive. And we're going to make a little bit less money if we survive. And Lehman didn't. And that's why Lehman was under pressure first, right? It was because of decisions that they had made that put them in that position. And of course, everybody in the industry was prone to that, but some more than others, which is why the ones that were the first ones to fail. And then it was just kind of the dominoes were falling, and the Federal Reserve came in and stopped it halfway through, going, oh, actually, this is a bad idea. Right? Yeah, I don't. I mean, did he ever do anything after that? I think that guy is kind of like blacklisted from the industry now, isn't it? Let's see. Let Dick Fold. But the clown running Bear Stearns was the worst. Maybe you're right. Bear Stearns is the one, like, so Merrill Lynch is the one that was like, that was the most prestigious of them that went under. That was really kind of like, that's when people really started to be like, this is a big problem, right? But Bear Stearns, I think, kind of gets forgotten. Oh, I think that for this one we have to go to C-SPAN. Right here. Federal Reserve Chair eyes on. Fold was named in Time's 25 People to Blame for the financial crisis list and in CNN's 10 Most Wanted Culprits of the Collapse. Fold was nicknamed the Gorilla for his intimidating presence. He was a strong man. After Lehman Brothers, on November 10th, 2008, Fold transferred his Florida mansion to his wife Kathleen for $100. They had bought it 4 years earlier for $13.75 million. In March 2009, Fold sent out an email stating that he had joined Matrix Advisors in New York City. In May 2010, Fold was registered by FINRA as employed by Legend Securities, a securities brokerage and investment banking firm. Left the firm in 2012. By July 2015, Matrix Advisors had grown to about 24 employees. The firm focuses on small and medium-sized enterprises, advising clients on a range of matters from opening product distribution channels to completing mergers and acquisitions and sourcing private equity and venture capital funding. By 2016, Matrix Private Capital had $100 million in assets under management from 18 families. That's not bad. By November 2017, the company had expanded by opening offices. In 2015, Fold put up for auction his 71-acre estate in Sun Valley, Idaho. The property was estimated to sell for $30 to $50 million. Fold remained critical of the government's decision to not bail out Lehman, despite bailing out other firms in distress. Fold reserves his most poignant criticisms for his longtime rival Henry Paulson, who ran Goldman Sachs before heading the U.S. Treasury during the 2008 crisis. By 2018, almost all claims brought against Lehman since bankruptcy had been resolved. Economist Lawrence M. Ball argues that Lehman had ample collateral to justify a U.S. government loan that would have staved off. Yeah, they should have banked. They totally should have bailed them out. But rejecting statements from former officials that such a bailout would have been illegal, however, established that Lehman's assets were shrouded in uncertainty at the time of bankruptcy due to extensive balance sheet manipulation and accounting fraud. Okay, so I am getting from the News Squawk information about him, but I'm not seeing it on C-SPAN for some reason. See if we can find it on YouTube. The hell? No. I think that maybe his opening remarks have been released and that he has started speaking. There was some volatility there, but still where they were. Oh, okay, here we go. Oh man, the audio there is really terrible. I'm getting noise. Okay, there we go.
Good morning. This committee will come to order. Chair Powell, thank you for being with us.
Can you hear that okay?
Appreciate your willingness to have a chat with us about some of the really important issues facing our country. Without question, the Federal Reserve serves a
US
critical
Treasury
role in
yields
the
modestly
function
extend
of
gains
our
after
government
Fed's Powell's
and the
remarks.
global
10-year
economy.
yield last up
You
3.6
have the
basis
ability to
points
influence
at
markets and directly
4.531%.
impact the financial future of hundreds of millions of Americans.
Big
That is
spread
why
there in the
Federal
macros.
Reserve is supposed to be an independent institution free from politics. But in recent reality, the Fed has been susceptible to political pressure. Take, for example, the Fed's involvement in the Network for Greening the Financial System, a group dedicated to green financing and climate change, which the Fed joined in December 2020 as President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB, how can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs.
I really hate
31%.
the senator's injection of politics in these sorts of things, but you know that's how it
Thanks
goes.
to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital necessary to start new businesses, grow existing businesses, buy a home, and pursue their American dream. Chairman, I look forward to your comments and your testimony. I will simply say that I believe that weaponizing an independent agency like the Fed for liberal positions, from debanking crypto, bank stress test, and the green financing scheme, is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell, it is no secret that you and I disagree on the need for strong bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal.
She's talking about a bunch of stuff that has nothing to do with the Federal Reserve.
Of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans and Congress if Doge's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate.
You don't take bets on the drivel of these morons. I know. I find the testimony really frustrating because, like, he can't really trade during it.
Plans to gut big bank stress tests.
And this will be going all morning.
The immediate political appeal of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps. Thank you, Mr. Chairman.
Yes, ma'am. Today we'll hear from Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report to Congress. Chair Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you,
All right, here we go.
Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve's supervision manuals to remove reputational risk as a tool to weigh in on political topics?
Fed's Powell says we will commit to work to help
happy to make that
end
commitment.
debanking.
Thank you, sir.
I'll turn off the
Voice
clock.
news disconnected.
Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed
Keep an eye on Twitter if
resulted
there's
in the
anything
loss of
outside of
billions
this that
of
hits
dollars.
markets.
Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs that went really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held accountable for that. I'll move on though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right, first of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn it over to the ranking member. I'll say this. After having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from these CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries, and that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over the weekend, Co-President Musk and Acting Director Vogt effectively shut down the CFPB. No more cop on the beat looking out for a family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees.
I really don't like her.
It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President
I have to like her, but the CFPB bureau was needed. I think that the things that they were doing was needed. I always kind of did not understand why they needed to create a new government agency to do it.
Asked for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks? Or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you.
Block by.
Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I have my money in one of those giant banks, I might think about
buying
the
through
smaller
this.
banks, where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too-big-to-fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks.
One issue I have here is that the JPY Japanese yen kind of seems to be struggling.
In your own words, would render the stress tests toothless.
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that. And so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds.
Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. I've got a series of questions, but I would like to give you an opportunity, if you would like. The suggestion that the ranking member has made here is that the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any.
Any changes in any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very good.
If in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. Now, I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III Endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III Endgame. We think it's good for U.S. banks, it's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III Endgame proposal. And I think we can do this reasonably quickly, one that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks. And I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area. I would guess. Our
expectation would be, and the markets would expect that it would be neutral with regard to capital
in that range. But I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about, is this an appropriate order? Is this payee on the don't pay list and all those things? Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this, it cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired. But you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details. One thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this.
They kind of wonder what that buying was about, but because now it's back at the bottom.
The playbook that was the problem. I think perhaps a discussion about how that playbook has been revised would be appropriate in the future.
This is what sucks about trading during these sorts of things, right?
Cortez Master.
It's just like if you catch a flow, it's often very short-lived.
Thank you, and thank you always for the conversations in between these hearings as well.
In a hearing like this, when they're asking him questions, his goal is to not say anything market moving, right? So it doesn't really provide a very fertile environment for trades.
The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under $10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be
banks.
CFPB.
Yes.
Okay.
That's
and
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has $10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't supervise.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government, and listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you. Let me ask you this, and we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy, but there are folks in my home that are in my state that are waiting to buy a home, and we know that's still an issue. The high prices right now for home affordability, you add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
So overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here.
Okay. Yes, ma'am.
My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
He was expecting a longer response to that.
Big pictures should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
Very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about France?
No, thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Spoos seem to be taking off.
I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing.
I don't know if we've landed yet.
It seems to me that you and some of the ladies and gentlemen for your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the and
It's master at indicting. He's gotten pretty good at it over the years, hasn't he?
I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the Open Market Committee. You can't control long rates, though, can you?
No, you can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't seem they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. One theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them, and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them. The CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reid.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much.
I think that if Powell said Trump is an asshole accidentally, that the Treasury market would probably sell.
Years has made a tremendous difference.
I'd go short.
We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%.
Why don't I trade that range? Because it's literally going randomly across the two-tick range.
Gross domestic product grew 2.5%. The unemployment rate was.
Can you imagine that? Hold on.
Labor force participation rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that.
You come in here,
Today,
you're like, oh, okay. It's going back and forth across this range. I trade it. Okay, you get stopped out. You get stopped out. You get stopped out. Depending on which direction you're going, right? You're going to hold it through this whole trend? I don't know.
Yes.
What are you going to do now? Go short here? Take the profit here? Goes back to there, you lost?
On China, Canada, and
Like the risk reward is just not worth it.
raise costs on families. In fact,
What information do you have that's going to tell you which direction it's going to go?
$1,200 per year households will be paying extra. An increase of inflation by nearly 1%, economic growth, depression, and
I do think that
the average car price by $2,700.
held a gun to my head, I would favor longs,
say
but
this,
I'm not very confident on that.
Standard case for
Just because the overall
logic
flow
still makes sense.
has been long,
It
aside
didn't
from
work
that
well.
brief
We
little
have
short.
one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman.
Yeah, almost everybody that's on these committees
Federal Reserve.
are. I think I would make a better
It's a pretty
senator on the financial
not allowed
committee than these guys.
Thank you.
That's probably hubris on my part, but that's how I feel.
We've communicated back and forth about synthetic risk transfer as a potential danger to the banking system. And could you give us some insights on how
Now that I'm
we can
40,
improve financial
I'm
stability
old enough
by
to be doing some of
regulating
these things.
transactions more
I'm
appropriately?
constantly looking at it like,
What we've been
maybe
doing
I
for
should
some
have
time
like
now is
really gone
looking at
for
them on a case-by-case
being a politician or
basis.
really
If they
gone
really
for
do
doing this or
transfer
that.
risk
Because like
successfully,
I feel like I would
that's
do
okay.
a better
And,
job than
it's
the people that
a-
I'm seeing on TV.
If a bank wants to transfer risk off its balance sheet in a way that it gets compensated for and all that. But what you want to make sure is
Oh, you made money
the risk is
on,
really transferred, and that was the
I
problem.
was gonna have that on my list actually over here.
Appeared to, but did not accomplish a transfer of risk. So
Program
we
gravity
see this coming, and
strategy.
We've been looking at these transactions on an ongoing.
Really
basis.
skeptical of it though.
Well, I commend you for that. In fact,
To be honest with you.
what happens typically is the transaction becomes complicated by synthetic,
I kind of feel like
as it was the case with
anybody trading
derivatives. So,
NQ'd this morning should be profitable as long as they went
talk
long.
about housing. It's absolutely critical everywhere across the country. In a housing shortage, of course, while housing is difficult, two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would
Well,
be
there's the
detrimental.
beep. You guys can continue to watch this on C-SPAN.
That's really
I'll give
a
you the
question
link
for,
here.
For you, I mean, we're putting them
But
back in
I've got
putting
an
housing
interview in an hour and some other things to do.
sector has some appeal.
So I am going to go and get started on that stuff. Because I don't really like watching this.
Appreciate it.
Thank you, Senator Ricketts.
Took three. Oh, wow. It takes a lot of trades,
for
Chad.
holding this important hearing, and thank you, Chairman Powell,
Well,
for being
I'm going to
here today
program it up
about
here this morning, I
economy
think,
and all
and we'll
the
see.
things that are going on. I want to,
All right, guys.
again, something
Stay
that,
excellent, team.